digestion. I think we should get that in equities at some point as well, because they've had this monstrous movement back to all-time highs there and thereabouts. You probably get a bit of congestion, a bit of profit taking, and then we get the leg higher. That leg higher should be, all of June should be strong. All of July should be strong. August should be more complicated, which is what we've been saying, which should be phase two of the correction of the banana zone.
Hey guys, welcome to Everyday Finance. The connection between big changes in the economy and crypto market cycles is getting stronger as global liquidity changes and correlations between asset classes get tighter. In a recent macro briefing, Raoul Pal, CEO of Real Vision, and Julien, CEO of Global Macro Investor, laid out a three-step plan for figuring out where crypto is going in this changing environment. They say we're now well into phase two of what Pal calls the banana zone. This is a liquidity-driven period when altcoins do better than expected, retail investors start to participate again, and digital assets experience sharp upside volatility. When Bitcoin broke out in late 2024, it was the start of phase one. Now, in mid-2025, capital is aggressively moving into a wider range of assets. From Solana to meme coins, BID backs up this prediction with rising PMIs, better US growth indicators, and a looser financial conditions index, all of which point to a coordinated rise in risk appetite. Some experts warn, though, that this happy time could end in August, especially if the US dollar index goes up to 104 and makes money tighter. That drop wouldn't be the end. It would just set the stage for phase three, the happy ending stage where money flows back into Bitcoin and Ethereum and prices go through the roof. By looking at liquidity flows, macro signals, and technical indicators such as DMARC wave counts and global M2 shifts, Pal and BID give a detailed plan for how to get through what could be the most important part of the crypto and macroeconomic cycle so far.
This is not, global M2 here is not updated for the dollar's recent move higher. And I actually think the dollar may head a little higher here. I'll show you that chart in a second. But if that's right, then this top bit in global M2 will come lower and should set us up for that corrective phase, which that other chart also matches. And as I pointed out in MIT,
but financial conditions leads M2, right?
Financial conditions leads M2, but here you're talking about the rate of change versus, remember, it was that whole thing of the everything code dominoes. There's a bit of a difference in the lead versus rate of change versus outright. And so basically what here they would line up to say around August, we should see something, but we have to see, right? It really depends on what the dollar is doing. Because if I just shift,
but we're expecting financial conditions to continue to ease, right? Because we think there's another leg lower in the dollar. We think rates either stay flat or move lower.
Yeah, so that's right. So, but if we just skip back up here, I'm going to come back to the dollar. Where are we here, right? So now we're coming lower. Obviously, yesterday we moved a little bit higher, but I think that ultimately the trend's lower. But I also think over the next, if you look at, guys, I'm just going to change screens here. That's all right. To Bloomberg. If we look at the dollar here, right? I mean, we've counted down to wave 5 and we had a 913.9. And this is basically where you and I were like, this is going to go higher. The chart's not on the screen, is it? No, it's off.
Yeah.
Okay. Is it? Oh, there it goes. Now it's back.
Yeah.
Then it came lower, and then we unlocked a wave 2, or now we've unlocked a wave 3 of potentially 5 higher. I don't know if that plays out, but you can see that the counts are all stacking up here pretty heavily. So in the event that the dollar does move higher to, let's call it 104, which DMARC wave count suggests, which seems a bit high to me, but nevertheless, this would unlock that corrective period,
which is looking like August into September, maybe. We don't know the length of it yet.
Yeah, so that's why I was saying at MIT, the next move in the dollar is going to tell us everything that we need to know about, the ISM, when that peaks out, everything else. But I think whether this goes higher or not over the medium term, not even medium term, I should say over the short term, we still think it goes lower. The other thing I was just going to point out,
which sets us up for phase 3 of the banana zone. So phase 2 correction would be this. If it continues to trend sideways or a little bit stronger, that would be a corrective phase when everyone starts thinking it's all over, we'll give up now. And then we should get phase 3, which is the final leg in the dollar, potentially a leg lower in rates and the more speculative frenzy that comes at the last part of this.
Yeah. And just because I have this open, Uber, and I'll let you pull up your charts, is I was looking at Solana vol levels today, just out of, but I also don't know why they cut. Did you notice that they cut our time series?
No.
Now it only goes back. I could have sworn it went back.
Do the XSO current, the other version of it?
I tried. It's the same.
Really?
Yeah. Anyway, but here's the point. Solana vol levels have collapsed to below 50. And so the last time that this happened, the last 2 times that this happened was September 27th of 23. And then Solana went on to basically 10x. And then June 24th of last year. And then we went up, around 100% or so. So that's kind of interesting because I hadn't realized that the vol stuff has collapsed so much.
No, me neither.
So I'll do the same. We can do the same for Bitcoin and ETH and look at a few other things for GMI. The other thing I think you were going to point this out as well is I do see a 13 daily on Bitcoin. The only problem I have with this is if we look here, kind of December time, liquidity was draining and city economic surprises had peaked. So, the 2 drivers, both if the market's priced off of consensus expectations, it now needs to reprice stronger growth coming in versus the opposite. And liquidity is actually rising if we talk about M2 versus the opposite, which was taking place.
Raoul Pal and Julien stress that macroeconomic trends are important, but that the technical charts for the most important crypto assets are sending strong, bullish signals. Solana's volatility has dropped below 50, which is a very strong sign that has historically led to big rallies in both 2023 and 2024, including a 10x surge. There are also good signs for Bitcoin and Ethereum. DeMark indicators are aligning at key support, and continuation patterns like flags show that prices are more likely to go up than down. Some indicators, like RSI, show that the market is overbought, and it feels like it's not moving. Pal calls this phase the boring zone, which is a time of consolidation that usually happens right before a big move-up. On charts for Bitcoin to XRP, classic bullish patterns like inverse head and shoulders are appearing. This supports the idea of a breakout for more altcoins. At the same time, Bitcoin's dominance is starting to fall, which is a classic sign that money is moving into altcoins and a key feature of Phase 2 in Pal's banana zone framework.
No, I think this should be a corrective flag pattern. And then when we break higher, it'll be some sort of cup and handle or whatever, and that'll push us to the next level, back up to maybe the highs. So I think everything looks as expected. I think it's going to be boring for a few days, but let's see. Anything else you're thinking about?
No, not really. As I said, I did my kind of brain dump yesterday.
Yeah, I don't know what the fuck we're going to write for GMI, but
I mean, we'll figure it out.
Yeah, we got a call on that later.
No,
but yeah, I think that's it, guys. There's not much more to talk about. It's kind of everything's on track. Just a bit of overbought digestion. I think we should get that in equities at some point as well, because they've had this monstrous movement back to all-time highs there and thereabouts. You probably get a bit of congestion, a bit of profit taking, and then we get the leg higher. That leg higher should be all of June should be strong, all of July should be strong, August should be more complicated, which is what we've been saying, which should be phase 2 of the correction of the banana zone.
The other thing that's just before we go is the only other thing I wanted to say, which I think you and I were talking about before before you were in Texas was the fact that of how underweight institutions are on equities, right? That chart from the Bank of America Fund Manager Survey. So they're the most underweight since May of 2023, as I had pointed out yesterday. Speculators are still net short the S&P 500. And what I had said is, you and I both run money. And when you're underperforming, although you were at a hedge fund, I had a benchmark, but when you're underperforming your benchmark and you missed this rip higher, there's going to be serious FOMO once equities make new all-time highs to get into the market. Because that's why I think there's a limit to how much further the market can fall on that basis. But that's just, I just feel like these dips will, whatever they are, be bought because there's still a huge amount of people that are short and not in the market.
Yeah, I think the other thing to bear in mind is that if there is a dip near all-time highs and the economic data is improving, that dip will be bought because it has to be by the institutions and the hedge funds. So that again sets us up into a very strong back end of the year.
Yeah,
just because of the positioning and how badly they've underperformed.
To have been sidelined on a 30% rip in equities.
It's huge. I mean, that's your whole fucking year's performance out the window.
Yeah, as I said in the video, I said bye-bye bonuses.
Yeah, and there was somebody posted on X that I'll use for GMI, the skew. I mean, everybody's massively underweight tech.
I know. Yeah.
I mean, holy shit. What are they thinking? I just don't understand. You're in the midst of the largest technological revolution of all time and the fucking underweight tech. I mean, I've never seen such mid-curving in my life.
Yeah, I was going to say just that. It's just a massive amount of mid-curving.
Raoul Pal and Julien say that the current crypto bull cycle is being pushed by strong macroeconomic data and a change in what the market thinks will happen. Their main point is that changes in money matters, like lower bond yields, the dollar, and commodities show that there is a lot of cash available, which makes speculative assets like crypto more popular. The Citi Economic Surprise Index is at its highest level in more than a month right now, with regional PMIs in the US, like Dallas and Richmond, doing better than expected. This points to a rise in growth expectations, which goes against the fears of a recession that have been the main storyline since 2023. BID says that the ISM, which has been thought of as a reliable cyclical indicator for a long time, is now turning upward, which has historically been a sign of the start of big crypto rallies. GMI's data shows that when financial conditions get easier, global M2 growth tends to follow. This makes more cash available. That's not all BID does. He also looks at the 3-month rate of change in global M2 when compared to prices of commodities like oil and copper. This model says that a peak will form around August, which could mean that the crypto market has reached a temporary high point. But the US dollar is the wild card. According to DeMark wave counts, the DXY could rise toward 104. This could make things more difficult and lead to a sharp, short-term correction that could last until September. According to Pal, this wouldn't be the end of the cycle. Instead, it would be a healthy digestion phase before Phase 3 of the banana zone, which is the last euphoric rally led by Bitcoin and Ethereum. This pattern is similar to what happened during the last 2 bull markets in 2017 and 2021. During those times, there were also sharp mid-cycle corrections because the dollar got stronger and yields stayed the same. Keep an eye on key indicators like the DXY's movement near 104, ISM and PMI trends, and changes in global M2 to figure out what will happen next.